Alright, hi guys. So I hope that you guys had a really good holiday and a really good weekend. So today we'll be going through two counters. One is Hemas Holdings and the other one is the MGT. So just to let you know why I chose two different counters. So Hemas is obviously in a clear downtrend, and the reason why I picked it up is so far what we have looked at is mostly counters that are moving to the upside. So just for a change, I wanted to show you guys how I would look at a stock if it's moving downside, if it's moving to the downside, and what would my thought process be. So apart from that, we'll also look at MGT, which is obviously in a clear bull market. So let's quickly start off with Hemas Holdings. So overall, we do the same thing. We zoom out of the chart. So if you look at the chart, you can clearly see that since prices topped up in this 2017 run, we had a very strong downtrend all the way from 2017 all the way over here, and since prices bottomed out in this COVID-19 lows, we broke this trend line over here, and since then we had a very strong January run where prices almost doubled in price. So is that a good sign? Well, had you looked at it in January, it would have been a good sign, because obviously when we look at the 200-day moving average, you can clearly see that prices got above the 200-day moving averages, and also the slope of the moving average was sloping upwards, so in line with the overall price action. So had you seen it even around this area over here, that would have been a very bullish sign. However, since around this top over here in early June, we have seen a very strong downtrend. Now that's where things obviously get very difficult for Hemas. Now if you just keep the moving average and look closely at the price action, how do we define a bull and a bear market through a moving average? So we use a 200-day moving average, which is the filter that divides a bull market from a bear market. So if prices are above the moving average, we are in a bull market. If prices are below the moving average, we are in a bear market. Now that being said, if you had watched my previous videos, I said that I pay more attention to the slope of the moving average and not just about whether prices are above or below a certain moving average. So as of now, you can see that prices are below the 200-day moving average, and at the same time the slope is trending down. So that clearly indicates that we are in an overall bear market. Now looking at this, let's quickly add on the 20 and the 50 moving average that we normally use, and also if you had watched my previous videos, how we define an uptrend using the moving averages is when the 20 moving average is above the 50 and the 50 moving average is above the 200-day moving average, and all three of them are sloping upwards. Now just like that, it's a complete opposite in a downtrend. We can see that the 20 is below the 50 and the 50 is below the 200, and all three of them are sloping downwards. So that is how we define a downtrend using moving averages. So now that we have looked at the moving averages and all of that, let's quickly jump into the weekly chart to see a possible pattern. So let me do this. Let's look at a possible support level before we look at certain patterns. So as of now, we have this key support level over here which is roughly between 54 and 55. Now had you watched one of my previous videos where I explained about the polarity effect, so what that means is that prior resistance once broken turns into support, and the opposite of that is prior support once broken turns into resistance. So as of now, you can see that prices were finding resistance around this range, and also we saw that prices did break out in this during 2014 before we saw this very strong uptrend for around 3 years. So now that this resistance level was broken, you can expect that if there is a pullback, this level will act as support, or a level where buyers would come in. So you can clearly see that the COVID-19 lows bottomed roughly around that level right here, and then we had a very strong upside move. Now regardless of that, we so far know that this level might be a possible level where buyers might come in to buy the stock. So 54 to 53 is a level of interest, and also we have around this level right here, which is roughly at around 60 rupees. So we can call this a range. We can call this a range between 54 to 60 rupees. So this level would be a possible demand zone for buyers. So if for people who don't know what a demand zone is, like the word says, it's a level where buyers are likely to come in and provide some support for the stock. Now, will prices hold this level, or will it go below this level? Now we can't obviously say, I can't obviously guarantee you whether it will hold or not. Now one thing for sure we know is that prices are in a bear market. So most likely if the overall trend is bearish, then most likely, you never know, we might see prices break below this support level as well. So which is why you don't buy stocks in a bear market. Now there are two different ways. Now obviously my style of trading is that I am short-term biased, but so therefore I would obviously never look at Hemas or even look to buy it. But on the other hand, if you are an investor, what investors look for is bargain prices. So usually how you get bargain prices is when the fundamentals remain the same and prices move into an overall bear market. So what happens then is people start selling, panic selling, and jumping into counters that are already moving, and prices fall apart even though the fundamentals don't change. So that's when you get bargain prices, and that's when investors look to get in. So usually investors like to get in when prices are below the 200-day moving average, provided that the fundamentals have either improved or remain the same. So as far as I am not sure about how Hemas is doing from a financial point of view. So provide if Hemas is doing okay, or if the outlook has improved, and if prices are in a bear market, then that would be a possible reason for investors to get in between this 54 to 60 level. However, if the fundamentals are also pointing downwards or is weak, then you have two reasons not to get in on Hemas, whether you're an investor or a trader. So what it says is that the reason that prices are falling is also justified through fundamentals as well. So you obviously need to, if you're going to get in as an investor from Hemas, on Hemas, then you obviously need to look at the fundamentals and see whether there's a reason to justify that prices are falling, or is it falling because there aren't enough buyers, or there isn't enough retail attention and institutional attention to get into Hemas. So in that case you can go bargain hunting. But apart from that, if there's a reason to justify the downtrend through a fundamental point of view, then you clearly have a reason not to get in on this counter. So yeah, so now that we have established two support levels or a support range between 54 to 60, let's quickly look at a chart pattern. So what you see here, if I'm pretty sure some of you would have already seen it. So we have kind of a bullish wedge over here right here. So looking at this overall, what we see here is we are yet to break out. Now remember that despite the pattern being bullish, you need to always be in line with the overall trend. Bullish patterns can occur anywhere on the chart. It doesn't have to be in a bull market. It can be in a bear market. It can be literally at the bottom, right at the bottom of the chart. So bullish patterns can happen anywhere. You need to know that. And just because it happens does not mean that it's bullish. Usually most of these patterns work out when the overall trend is in line with the pattern. So here the overall trend is not in line with the pattern. That's something that you need to keep your eye on, and you need to know that if the overall trend is not in line with the pattern, most likely these patterns usually fail. So in terms of a price target, obviously generally we look at the pattern high. So usually for an upside price target you'll be looking at 100 rupees. But that being said, I'm a bit reluctant to give any price target to the upside because the overall trend is not in favor of the buyers. So therefore I'm not going to really emphasize on an upside price target until I see price action start favoring the buyers. But in terms of a downside target, we might possibly see a retest of this 54 to 60 range. Possibly, I'm not saying that it will happen, but most likely by the looks of it, since the overall trend is downwards, most likely you might see a further pullback towards that level before buyers start coming in. So like I said, remember, so let's roughly go through everything that we have spoken about. We know that the overall trend is negative. The prices are below a declining 200-day moving average. We see a bullish pattern, but like always, the primary trend should be in line with the pattern. If it's not, then it's best that you avoid trading that pattern. We can clearly see that selling pressure is high in this range, and also we have established the key support zone between 54 rupees and 60 rupees. So that's roughly where possibly buyers are likely to come in at that level. So look at Hemas. For me, in my opinion, since I'm a trader, I would obviously not look at it. I barely look at Hemas, but obviously it depends on your strategy. Like I said, if you're an investor, you need to look into the fundamentals to see whether you can justify this drawdown. If you can, then it's best avoided, even if you're an investor. If it's not, then most likely you might be able to get in at a good price, and hopefully prices will start favoring the buyers on Hemas at some point. So depends on your approach. Obviously know what sort of trader or what sort of investor you are, whether you're a trader or a normal long-term investor. So depends on your strategy. So that's about it on Hemas holdings. If you, like I said, if you have any questions, always don't fail to comment below. I will take my time to reply. I have a lot of messages reply on my previous videos as well, so I will reply to them and then get back into this one. So make sure if you have any questions, you can always comment below. So let's move into MGT. Right, so MGT is obviously a lot different compared to Hemas. Now you can clearly see the prices are in an uptrend, overall uptrend since the COVID-19 lows. So we have how we define an uptrend is through a series of higher highs and higher lows. So we can see a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and it goes on. So that's how we define an uptrend. So let's quickly look at the moving averages, which should clearly be aligned because of the trend. Now you can clearly see that the 20 is about the 50, the 50 is about the 200, and we are in an overall uptrend. And also in terms of the volume, you can see that buying pressure is relatively much higher than selling pressure. So let's quickly look at a chart pattern. So let's look at the weekly chart because I want to filter out the price action on the daily. So what you see here, I'm pretty sure some of you would have already seen this, but what we see here is an ascending triangle. So an ascending triangle is a bullish pattern, and there are multiple things. Now there are a few instances where prices have stalled. We can see multiple wicks over here. For those of you who don't know what a wick is all are these lines, are these long lines up and down. Those are what you call wicks. So you can clearly see the wick. There are long wicks over here, which means that there were a lot of active sellers around this 38.50 to 39 range, and that was obviously a key area to break. Now once we did break out, we can see that prices had a good close above resistance, and most importantly we saw some heavy volume coming in, which was the highest weekly volume for roughly around over 2 months or so. So that was a very good breakout. Now in terms of what's happening as of now, we can see the prices are consolidating in this range. So you can see very low selling pressure, which is good sign. How we want to know whether the trend is still strong is through volume. So if volume is favoring the buyers, then most likely prices are likely to continue higher. So how we look at it is, whenever prices are moving high, we need to see volume increasing as prices increase, and when prices are pulling back, we want to see the volume continues to decline as prices pull back. So that's how we want to see. Now as of now, we can see that prices increased and then prices have been declining over the past 2 weeks as prices consolidate. So that is a good sign. And if you're obviously looking to buy this, this would be the best level to buy, around this 38.50 38.60 level. I don't know whether it will get to that range. If it doesn't pull back to that range, then most likely another level would be this 39.50 level. So that's also a possible level to look at. Now in terms of price target, usually, like I always say, the price target is measured by using the height of the pattern. So the height is the highest point over here, which is roughly at around 38.50, and the lowest point is roughly at around 31 rupees. So that's around a 7.5 rupee range, and you add it to this level right here and you get a price target of 46 rupees. So sorry, wait, let me check it again. So 38.50, 31, that's 7.5, that's, yeah, that's 46 rupees. So If you look at it, as of now, prices did almost reach that 46 level. So if there's anything, the prices fell just 50 cents lower from the price target. So in terms of that, I still feel like, looking at the overall chart, we can still see an extension above 46 on MGT. So it depends on where you're going to get in, but as of now, I think you have a pretty good justified risk level over here. So if prices close below this 38.50 range, then that's a level for you to stop yourself out. That would most likely indicate that prices are most likely gonna pull back further. So looking at everything that we have spoken so far, what we have looked at is, we have looked at the overall trend, which is positive. We have looked at the moving averages, which is also favoring the buyers, and then we shifted into the weekly chart. We can see a bullish pattern where we saw a confirmed breakout where prices closed above resistance, and there was heavy volume to justify the move. Also, looking at the price target, we looked at the height of the pattern and we added it to the breakout level, and that gave us a price target of around 46 rupees. So prices almost reached that target. It just fell off by around 50 cents. As of now, we can see prices are consolidating, and the consolidation is happening on lower volume, which is exactly what you want to see. That means that most of the people are reluctant to sell shares at these prices. So and also we have looked at a price target, but most likely we might see a further extension above the target. But most importantly, we have figured out a risk level as well. So your risk level is going to be if prices close below 38.50 on the weekly chart. Always remember, we are looking at the time. Always remember the time frame that you're looking at. So if we are looking at the weekly chart, we need to see a weekly close to confirm a move, whether it's a breakdown or a breakout or anything. You need to confirm it through your time frame. So since we are on the weekly chart, if prices only close below 38.50 on the weekly, so pretty much the last day of the week, it can be a Friday, sometimes there might be holiday on Friday, so it can be Thursday, but regardless, the last day of the week, if prices close below 38.50, then that's when you stop yourself out. So looking at now, since we have looked at pretty much everything, right, I think we have pretty much looked at everything. So I believe that you guys got what I said. So if you guys have any questions, you can obviously comment below, and I'll be happy to answer your questions. So if you guys have any suggestions on the next few stocks that I need to look at, you can comment those below as well. I still don't have an exact plan on what I'm going to look at tomorrow. I'll probably decide it today, or I'll probably decide on what you guys comment below on the video, and then accordingly I will make the video tomorrow. So yeah, so we have looked at Hemas, we have looked at MGT. So we know that MGT is positive, Hemas is negative. So the most important thing is to look at Hemas is mostly the fundamentals. So I'm not really looking at the fundamentals, but if you are looking to buy it, then you need to be a bit more aware of how the company is trending so far in terms of their financials, and whether there's a reason to justify the downtrend. If there is, I would avoid it. If there isn't, then likely pick a good support level. Like I said, the 54 to 60 range is possibly a demand zone, and then look to buy it on those levels in anticipation of an uptrend over the long term. So that's about it. I hope you guys found the video useful. Most importantly, make sure to like, subscribe, and comment below. Most importantly, like the video, because that helps some YouTube algorithm or something. So that will help me get more views onto my account. So if the video is helpful, please make sure to do all of that. And thank you for watching the video, and hope you guys have a really good day. Thank you guys. Thank you for watching.